Welcome. Today we're going to be going over the EMA flow. This is going to be a strategy or a strategic way on how I like to identify the markets. Specifically, we looking for a break on the 50 EMA. So I'm going to go ahead and go over like a quick example real quick. These are the confirmations, and this right here is a coloring of our different EMAs. I guess I'll go ahead and break them down real quick. On our first smaller 5 EMA, we have the 5, the purple, we have the 13, the aqua, the 50, the 100 is the light gray EMA, and the 200 is the dark EMA. Now, the 100 and 200 is not really needed for the purposes of our confirmation, but I use them as a moving support and resistance, right? All the EMA for me is a visual representation of structure, support and resistance, supply and demand, whatever you want to call it, moving and visually giving me an identification on where I can use it in the market. So let's go and get in. The first step is we got to find the cross. So this can be used on any time frame in any market. So for example purposes, I'm just going to look at where we are in recent price action. I'm going to use this example right here. We're going to use this bearish cross right here. Now, the cross that I use is mainly important because it's going to line up for our trade entry later on. So the first I like to do after I identify my cross, right, I like to highlight that candle. What I mean by highlight, I'm going to draw a box here. I don't know what just happened. I try to draw a box. I'm going to draw a box and I'm going to extend it outwards. The purpose of this box, let me go ahead and replay it so I'm not exposing the truth here. The purpose of me highlighting this is so when price comes back after it goes down and goes back up, you know what I'm saying? I want to be able to see specifically where in the market am I allowed to get into the buy zone because it's no longer selling. So after we find a cross, the next thing is for me to measure the Fibonacci. Also, I forgot to say these color fill-in zones are just the fill-in colored zones for the 100 to 200 and the 5 to 13. Once again, those are to give me just a visual representation of the market flowing. I could look at it naked, or I could look at this to give me like a little bit of so just a little bit of more flavor. What I'm gonna do now is measure my Fibonacci from this low all the way up to the high. Now, some people do it with the wick, candle on the candle. I'm not gonna get into that right now, but we're just gonna measure the Fib, get somewhere, right? The next thing we're gonna do is look for step 3. Watch for the reaction. Now, this step isn't technically needed for the 50 EMA cross because we're using the EMAs, but for me personally with my strategy, I like to use the Fibonacci to line up those specific levels so I'm not really guessing off an EMA that's lagging, right? Because we have to realize it's lagging. So after we have the cross, I see that price comes down and reacts off this 382 level right here, right in here. Okay, so after it does that, I have to be aware, okay, and see what price does. Does it go back higher? Does it break our 50 EMA or does it continue to go bearish? As we see, it's kind of hesitating here, but then we can see it breaks lower. All right, once we break lower to our zone, for me, I'm marking and I'm looking at these levels as we go. So I'm gonna draw this line right here. Boom. I'm gonna make this black, I'm gonna make this line, make it thicker. So we're looking at 73.82. I'm gonna actually do it like this, like that. Made that yellow. So I'm trying to enter at 73.82, and as it hits a fib level, I like to enter at least 2 fib levels apart. So if I'm looking at a reaction here, I'm trying to make an entry at least 2 levels apart because when I put my stop loss on, I have somewhere to put my structure. So there's other confirmations and we'll get into that as we go, but I'm just letting you know ahead of time. So right now, the 50% fib is my main buy reaction level I'm looking to go after. So my next step after, I can actually label these so we can all be together. This is my step 1. Step 2 is the fib. And now we're just waiting for the reaction. So we're here, we're at step 3. We've got a 50% reaction. Price has tested, it's touching the 50 EMA. For me, we needed the step 4 first, the lower time frame shift. All the lower time frame shift is the 5 and 13 EMA crossing. When it goes yellow, you see how it's yellow over here and it turned red, right here is a good example on a step 4. This is when the lower time frame shift, and then this is where the actual 50 EMA shifted. So it shows you, once again, a visual representation of the structure that's in the market, and it allows you to see, you know what I'm saying, what the market is telling you. So nonetheless, this right here hasn't given us a step 3, not step 3, step 4. So when it does this next rejection right here, I'm not surprised. I'm not one of the people that bought in early. This also would have been a first break. It did not confirm step 5 because it can skip step 4 and go straight past the step 5, but it didn't close above. For me, my step 5, the candle has to actually close. So we're going to continue. Boom. All right, this candle actually closed. So this is going to be our step 5. I'm going to actually mark this right here, and let's make it a different color. Boom, right here. So this is gonna be my step 5. Now this is an example where price just blew step past, but in actual reality, it's your step 4 and 5 in the same move. Price was just so fast that you're gonna have to look at price action and really identify where you are. But nonetheless, price is coming back down. So after we have step 5, we have a candle closing across our 50 EMA. Remember, price is the 50 EMA and the aqua in this instance, and now step 6, the BNR, the break and retest. Once price has broken my level, I need it to retest. You know what I'm saying? It goes up and it retests. For me, what is identified as a retest? Me, I'm just looking at it to come back to one of my fib levels, to be honest. So either it's coming back to this 382 level or this 50%. So let's see what it does. Okay, we're seeing we're hovering, and now for me, it just needs to close back across the aqua. This right here is good and valid enough for me to be a step 7. So I could have entered off here, but let's see what the next candle looks like. Boom. So when I see this breakout candle by the next one, I can't be greedy, right? I would take this. Because I didn't take this one, I would have taken this one. And my stops would be below the structure, or like I told you earlier, 2 fib levels down. I'm pretty much using this fib level right here. The 236 is my entry level right here at the 74.14, right in that range. 236 is the first level, or the entry level. The 382 is the first, the 50% is the second. So that's where my stops are beneath this low. And for me, for my targets, always go for the recent structure. I'm going for the recent high. That's not my actual target, but I always take profit, move my stops to break even, etc., etc. But I actually like to go for the full extension zone. I'm actually trying to give you another full example real quick. If I were to measure this full bullish move right here, let's make this blue so we're all on the same page. If I were to measure that and color that move and duplicate it and drag it over here, it would line up somewhere in these extension zones. So I'm pretty much looking for price to replicate itself, but not off of that bullish move, off of this smaller one right here. So that's all the price is ever doing, is just moving in waves. So I'm trying to look at something like this. You see what I'm saying? So when price actually comes up, boom, I actually remember the market here. It comes up here and it doesn't go into my full actual target zones up here, but it just kind of, I think it does. Let's see, actually. Okay, so look, it wicked. It wicked into that zone, and I'm pretty sure that's as high as price goes. Right, exactly. This is as high as price goes. So another thing I would like to point out is, if this is my entry, what's your exit strategy, right? I said this is my kind of break even. This is my first actual target. I actually have second targets. This would be my second target. So if I have a remaining position still open at this point in time, when the market closes across the 13 EMA, I take partials and I really move my stop loss into profit, or I do something, you know what I'm saying? I'm managing my trade more. Once I have a second cross that crosses the 13 EMA again, that's really showing me that there's about to be a structure break. I'm in a break of structure coming. So I usually like to fade out of the market, etc., etc. But this is just a quick example of the steps. Hopefully this made sense. Let's go look at something else real quick. Let's go look at something like NAS. SPX actually. I think SPX did something a little bit better. Yeah, so let's come over here. So just a quick recap real quick. Let me bring up the steps. Boom, boom, boom. All right, so what are we looking for? We're looking for a cross. I'm going to use this as my cross. And remember, I said I like to highlight that specific candle. so I just don't make some big giant circle like that. I'm gonna use this and I'm gonna highlight that candle. And I usually like for deeper retracement, so this is kind of a weak trade, but I'm just kind of going for video purposes right now. You see how price only retraced to the 236 right here. It didn't really give you no price action. This wasn't really a strong confirmation buy, but it did buy up straight into your extension zone. So this is still a 50 EMA cross. At the end of the day, when you get the confirmations to shoot, you get the confirmation. So you just let that thing go. This right here would have been your signal candle, and this would have been your actual entry candle. This would have been your breaker. So you have three candles that you really want to identify. Your breaker, which is your first candle that really broke structure, so I'm going to mark that as red, because that's where we are. Then you have your signal, the first candle that crosses across that 50 closes across that 50 EMA, and then the second candle that actually is your entry, which goes across and gave you a nice break and retest and continued up. Very nice. Let's go look for another one. If you have some consolidated markets like here, this is a point in time where you really just want to be patient, because all this is some higher time frame movement. Let's go look at, I think German 30 had an actual, what's good? Trying to find a good example. And as you can see, the market will move in waves. So let's look at this one right here. This is a counter trend one. You don't always have to be in the trend, but I'll use this as my last example. I'll measure this move. In this example, I'm trying to look for this bearish implementation. Let's replay the market so we don't cheat ahead. All right, so I see this bearish move right here, right? All I'm looking for is a replication of the move. So once I see this bearish move and price or actually not retrace, but continue the bullish trend, we're in a big giant bullish trend. All right, but I'm still studying this. I'm studying it and seeing if it's actually going to buy up. Once I see it reject back down, okay, I'm like, I'm going to actually start to mark my steps. So what are the steps? Let's bring them on the screen. One was to find the cross. Let's find the cross. This is my cross. I'm going to mark it blue because it's a bullish cross, and I'm going to highlight that candle so I'll know when it breaks that zone. I'll know exactly what's going on. We measured the fib already. Now we're looking for the reaction off of that fib. I see we got a reaction right here off that 618. So if I see the reaction off the 618, I'm going to count 2 fib levels down. 1, 2. This is my main fib level I'm trying to enter off of. Stops above it. Recent structure, that just so happens to be 2 levels down. And my first target is always recent structure. Now let's see what happens. All right, you see that this didn't give you another closure beneath the 50 EMA. If you look at it tightly, it really didn't close. Neither did this one. Neither is this one. It's holding. So if you see, price would have went straight to that stop loss. Look at that. And then what is it doing now? Price ended up going back down. So this is the case, what I'm saying? I probably would have had my stop loss right here. If I would have stayed in the trade for whatever reason, let's say someone would have gotten out of the trade. Once price comes back down and activates into this level again, you get back into the trade. I'm gonna let you know right now, trading is not a simple, easy thing, one and done. You will have multiple entries into the market. So it'll be good and bad sometimes, but as you can see, the market finally breaks down. Once we get actually below your entry level, we're at 236. You want to start to scale yourself into the market. See as we go. Like I said earlier, the 100 and 200 EMA is a moving floor and ceiling for me. So right now we're at the 200 EMA and price is struggling to close below. So if I see that this is happening, that price is struggling to close below, and I'm like so close, I'm like 30 points from my target, I'm definitely going to move my stop to break even. So it's a break even trade. I can no longer lose money. And let's see if it actually goes. It doesn't, but it does close across my 13 EMA. And I told you earlier, if it closes across my 13 EMA, I'm taking partials and I'm moving my stops to break even, etc., etc. So yeah, this is gonna be a little part one, a little quick intro video. I'll try to make more into this series, get more in depth, because once you have a more in-depth explanation, and we can start to add more EMAs and go to different time frames and use multiple structure to give you better confidence. But once again, Appreciate you. This is EMA flow, kind of a breakdown of like the 50 and 4 EMA strategy. A little different things. Appreciate you, and holla back. Peace.